So, Bismillahirrahmanirrahim and Assalamualaikum everyone. My name is Ifana Zifadir Amdi Jafri, 23B0835, and with my friend Farhana Nur Amalinda Mita Isa, 23B0823, we'll be explaining about our topic today, which is bank without riba practically in reality. So, we'll explain in more further details in the next slide. So we have about 9 contents right here, and starting off with the introduction, riba including definition, in literally and technically, and the types of riba, the prohibition of riba by including some verses from Quran, theoretical basis of riba, incentive for advancing interest-free loans, the challenges of implementing bank without riba by including the advantages and disadvantages, the example of global successful riba-free banks, and lastly, the conclusion. So the introduction of this is that a little bit of history of how it all started is that Arab merchants often lend money with the goal of earning additional money in the form of interest 14 years ago. So which is when the Islamic finance system began. It was standard procedure to identify those in urgent need of a loan. Then merchants gave them loans, raised the interest rate, and profited tremendously from the debtors' suffering. After that, the debtors spent their entire life repaying their loan and continued to pass it on their children to be responsible for the loan. However, the debt is never completely repaid because late payment penalties are applied to the original amount of each time, so that the pain of the poor never ends. So, so now with the Islamic Bank Party introduced a financial system promoting justice, fairness, equality, and ethics, modern Islamic bank now offer interest-free loans and investment. So the definition of riba in literally it means that it is an increase, growth, addition, and expansion. Technically, the additional amount of money that must be paid by the debtor to the creditor along with the principal amount as a condition for the loan or due to the late payments. Riba was described by Abu Ala al-Maududi as specified amount or profit above the amount of the loan that the borrower received according to certain circumstances over an agreed upon period of time. According to this, the definition of riba must include the following three components, which are an amount in excess of or above the loan capital, or determining the excess payments in relation to the maturity of time, and include the excess in the loan arrangement. So there are two types of riba, which is the first one, riba al-qard. Riba al-qard is an additional or excess that has been determined in the agreement between the two parties, namely the lender and the borrower. In an agreement, it is usually mentioned that the lender asks for certain additional usury to the borrower when the borrower has returned the loan. Secondly, riba jahiliyah. Riba jahiliyah arises because of the delay in the payment of the previously promised time for the lender. The borrower must pay an amount exceeding the amount of money that has been borrowed due to not being able to repay the loan according to the deadline that has been determined. So in Al Quran, the meaning is that whatever you lend out in usury to gain value through other people, wealth, and will not increase in God's eye, but whatever you give in charity in your desire for God's approval will earn multiple rewards. So in Surah Ar-Rum, verse 39, Allah states by advice that Allah does not like people who do usury. To receive God's guidance, it is not about getting rid of riba. Here, Allah rejects the notion that usury loans they consider to help people are a way to get closer to God in contrast to the will spent on zakat. Allah will give His blessing and multiple His reward. It is not prohibited nor it is forbidden. The discussion of usury in verse 39 of Surah Al-Rum, which belongs to the category of Malkiyah verses, gives an indication of how urgent this issue is. The verse explicitly states that riba does not imply the acquisition of reward, in contrast to zakat, which is paid solely to reach the pleasure of Allah. The people who commit it will certainly get a double reward from Allah subhanahu wa ta'ala. So for the theoretical basis of riba, which is the two-tier mudaraba, it envisioned the depositor signing a contract with a financial institution to split the commercial profit made by the bank. On the asset side, the bank signs a new agreement. That agent entrepreneur who is looking for investable capital and is willing to split the profit with the bank according to a pre-agreed proportion outlined in the agreement. So the bank shareholders and repository receive a portion of combined profits from all of the bank's operation as specified in the agreements between the parties. So as a result, the deposited profit represents a portion for the overall bank earning. This model permits bank to take demand deposits, which may be subject to service charge, and make no profit. The above strategy uses fractional reserve, even if it requires that current deposit be paid upon depositor demand. It further states that to the amount of portion of the total current deposits, the bank has to issue extremely short-term interest-free loans, which is called al-hasana. According to this concept, the depreciation of deposit value will represent the losses that the bank suffered from their investing activity. However, by extending the bank's investment portfolios and exercising thorough project selection, monitoring, and control, the likelihood of loss is minimized. The model proponents have proposed deposit insurance programs started in partnership with central banks and loss compensating balances generated by the bank from its profiles in good times as ways to lessen the likelihood of such losses. So overall, the two-type Mudarabah structure allows investors to pool their capital and leverage the expertise of intermediaries to invest in various ventures while adhering to Islamic principle of finance, particularly the prohibition of interest, riba, and the promotion of risk sharing and entrepreneurship.
For this slide, I'll be presenting on incentive for advancing interest-free loans. The correctness of this method as a practical solution to the problem is that providing real incentive for the banks to advance interest-free loans. So, a rule proposed by the central bank forces banks to use 50% of their loan account for loan advance, allowing them to invest 40% of this deposit in lucrative business. 10% of leftover will be kept in cash reserve, with banks being forced to prioritize profit making using the percentage of total capital set aside for investment in profitable firm. This law provides the first and most significant incentive for banks to offer interest-free loan. This provide a sizable sum of money that can be invested in successful business using Mudarabah. However, because banks have to return deposit on demand, there is a danger of loss when investing cash in an interest-free business. Alternatively, banks might put money into comparatively safe businesses even if they have a reduced profit margin. This strategy reduces the possibility of loss and enables banks to select institutions with the utmost trust by drawing on prior experience of raising Mudarabah capital. The advantage in implementing bank without riba are moral and ethical standards. Interest-free banking based on moral and ethical standards prohibits money exploitation and wealth acquisition through legal means, promoting social justice and fairness by preventing profit from causing suffering. Sharing of risk. Interest-free banking shares risk between bank and client, promoting openness and justice, unlike traditional interest-based lending, which transfer risk to the borrower. Asset-backed finance. Interest-free banking promotes asset-backed finance, reducing default risk, but unsecured loans in traditional banking institutions can lead to dangerous lending practice and excessive debt. Socially responsible investing. Socially responsible investing, facilitated by interest-free banking, promotes ethical companies and initiatives, fostering social welfare and sustainable development through investment in community development and affordable housing. Customer-centric strategy. Interest-free banking prioritizes client demand and interest, fostering trust and loyalty, unlike traditional banking system that prioritize profit, causing client attrition. Disadvantage. in implementing bank without riba. Lack of knowledge. Interest-free banking faces challenges due to widespread ignorance and misconception about riba-free banking and Islamic finance, making it difficult for banks to advertise their offerings. Shift in business model. Bank must adopt Sharia-compliant procedures and business model for interest-free banking, requiring significant time and resource commitment, engagement with Sharia experts, and working retraining. Restricted product offerings. Interest-free banking faces challenges due to limited product selection, financing choices, and compliance with Islamic banking standards, particularly in the realm of home, mortgage, and auto loans. Higher costs. Interest-free banking may be more expensive due to additional compliance expenses, such as hiring Sharia specialists and higher auditing costs for Islamic law compliance compared to traditional banking. Lack of standardization. Interest-free banking lack uniformity across nations, causing confusion and apprehension for banks and consumers due to differing interpretation of Islamic law by Sharia scholars. Global example of successful riba-free bank. BLME, or Bank of London and the Middle East. BLME, founded in 2007, offers Sharia-compliant banking services in London with a 1.2 million profit in 2020, focusing on enduring client relationship and robust risk management. Dubai Islamic Bank, established in 1975, is the first Islamic bank in the UAE, operating in Pakistan, Sudan, and Kenya, offering Sharia-compliant retail and corporate banking services, earning Global Finance magazine Best Islamic Bank title. Bank Muamalat Indonesia. Jakarta's Bank Muamalat Indonesia, established in 1991, offers Sharia-compliant banking services and has been recognized as the best Islamic bank in Indonesia by Global Finance magazine. Al Ryan Bank, established in 2004, is a British financial institution offering Sharia-compliant banking services in corporate retail and treasury goods, earning recognition as the best Islamic bank in Western Europe. Mizan Bank, Pakistan's largest Islamic bank since 1997, offers Sharia-adherent retail, corporate and investment banking services, earning recognition as the best Islamic bank in Pakistan by Global Finance magazine. For the conclusion, thus riba-free banking is essential. This is because of the perception that the riba is unjust and exploitative, rather profit and loss sharing techniques which encourage accountability, equity, and transparency are employed in Islamic finance, promoting accountability, fairness, and openness in the financial sector require ethical financial behavior. Institutions can offer a more equal system to all stakeholders by implementing riba-free banking practices. This contributes to the advancement of social responsibility, financial stability, and creation of an equitable system for all. Okay, that's all for our presentation. Thank you for listening.